Hi, it's Thursday, January 14th, 2016. Quick video on the markets, especially the stock markets today. We've had a pretty sharp rally in the Dow and S&P after the market being down again earlier today. As I speak, it's quarter to 8 London time, so quarter to 3 New York time, and the Dow is up 269 points or 1.66%. There is talk that Bullard, one of the Fed governors, has been the culprit behind this rally. Apparently, Zero Hedge, they're saying that he made a comment about oil prices, that there will be a bottom in oil prices, and they think, Zero Hedge think, that the market has taken that to mean that the Fed will stimulate the stock market. And if you remember back in 2014, I think September, October, back then, Bullard hinted at QE4, and that helped the market rally quite a bit from about around the same levels we were earlier today. Yeah, I'll put the link below to that to the Bullard story. I personally not too sure if someone from the Fed coming out and making a statement can really change things. Even though Bullard is saying that the low oil prices will keep inflation below 2%. You know, Look at Canada. I was reading an article earlier today that food prices are skyrocketing there despite low oil prices. It's more of a currency devaluation problem in Canada. The U.S. dollar, of course, has been strong, but I think it's a fallacy that the price of oil affects inflation. The price of oil is, a result of inflation or deflation. Inflation, in my opinion, is purely a monetary phenomenon. So back to the stock market here. I'm gonna looking at the stock market since let's see here. Since the end of last year, when we were around 17,600, we dropped almost in a straight line until excuse me, until the 10th of January. We made a low of 16,179, and since the 10th of January, so for the last 4 days, we've been basically consolidating, forming like a bear flag, if anything. So in my opinion, this looks more like a bear flag than a bottom. So we'll have to see. And if this continuation pattern of a bear flag continues, we could have a target just above 15,000. In the bear flag, you take the flagpole and you measure that flagpole on the way down, and then you measure it from the breakdown from the bottom of the flag, same distance, and this gives me a level around 15,200 in the Dow. So as you can see by this chart, the consolidation we've had in the last 4 days, that's all it looks like, a consolidation on a downward trend. And today's move up actually doesn't really seem to change much. Of course, we'll have to see over the next few days, Friday, tomorrow, and early next week, what happens to the stock market. Gold has been hit hard. We have rebounded from the lows today. We're now at 1,076. We got down to 1,071, and we've been as high as 1,095 earlier in the day before the U.S. comes in. It seems like the majority of times when the gold market is doing well early in London and Europe, when the US comes in, it always tends to come, to drop. It's almost like clockwork. So yeah, let's watch the Dow and S&P and see if this is a bear flag or a bottom. Take care. Bye.